Gibbs of Macquarie joins in to talk about how the markets might actually read the event of yesterday. Richard, morning. Thanks very much for joining in. What's your sense of what happened last evening? The talk that the next tranche of payment to Greece might be held up till they make up their mind one way or the other. Do you think we'll have an end to this brinksmanship by next week, or could it be a prolonged period of uncertainty till the 4th of December when the referendum is slotted?
Well, I suspect it will be a period of sustained volatility and brinkmanship as we get up to that 4th of December vote. We're hearing that the actual payments have been delayed and they will be contingent upon the outcome of that referendum. Of course, Angela Merkel saying that this is not simply a referendum on the terms and conditions of the bailout. This is a referendum on the part of Greece about whether or not it wants to continue in the euro. And that's really what markets have been reacting throughout Asia. This latest I suppose episode of brinkmanship came into play, as you say, after the close of US and European markets. So they're yet to really digest this. My suspicion is they will respond the same way as we're seeing through Asia today.
So do you think some of this uncertainty could be stemmed post the G20 meeting, or do you think the G20 might just be a non-event and no significant resolution or conclusion one way or the other should be expected at the end of that meeting?
Well, my suspicion is that the G20 is simply going to put more pressure on Greece, basically, because it will ratify the bailout package, the three-pronged approach that was outlined last week, and it will simply say it supports, G20 leaders support that approach, and that simply puts further pressure on the Greek population, basically, to ratify it at this referendum. Bear in mind, though, what we're also hearing today is that the latest surveys about support for the euro within Greece show that 7 out of 10 Greeks support a continuation of being a member of the euro area.
So, what are your expectations next week? Do you think post the G20 event we get lower in both for the euro and for the euro markets?
Look, I suspect it will do little to remove the uncertainty, and it won't change the brinkmanship, because really now the line has been drawn in the sand by Prime Minister Papandreou. That's the 4th of December. It goes to a vote. Obviously, the only thing that could really circumvent that is if there is a vote of no confidence in the government and the Prime Minister in Greece ahead of that referendum, which would suggest then that the referendum would not go ahead. So I suppose at the best we can expect is further volatility as we see the politics play out, particularly the internal politics within Greece.
A lot of observers have been telling us that the credit markets in Europe are giving us a very uncomfortable picture, contrary to what equities might have done through October. Would you take that concern on board and say that credit markets are indicating that nothing really constructive has happened despite the ups and downs of equities?
I think that's right. I think what the credit markets are telling us is that the risk-off trades are still very much there, certainly in credit markets, and this is something that wasn't apparent with the rally, of course, in equity markets, where equity markets really were priced for risk-back-on-again trades. We've now moved to a position where there is, again, an aversion to risk. There's a flight to quality. That's obviously in support of US dollar-denominated assets, and that is likely to continue. So I suspect that what credit markets are telling us is that it was far too early and premature to move back to risking capital, and that capital preservation remains the number one call.
There's been some talk that whatever happens on the Greek side, maybe because of the attendance at the G20, they might put together a financing plan which includes some of the large emerging market economies to fund that $1.4 trillion EFSF. A, do you expect that to happen? Any progress on that front? And B, if it did, would you think that would go down well with the market, or the market's just focused on the implementation starting with Greece rather than the funding of the plan just yet?
My suspicion is that the support for the European Financial Stability Facility is going to come through the International Monetary Fund probably not through individual emerging market supporters or sponsors. Their support for it will come through their contributions to the International Monetary Fund. The reason I say that is that we've seen from China that China is already suggesting that if it was to be individually involved, it would require some conditionality, and in particular that involves basically further liberalisation of trade regimes in Europe and access for Chinese goods. I suspect that given what they're seeing in Greece with the politics, that is going to be extremely difficult to successfully prosecute that case for individual sponsors of this fund.
So given what you've just outlined, do you think is it possible that global markets, including the S&P in the US, go right back to retesting the early October lows, or do you think it may not come to such an extreme outcome?
I think that's the risk, and that's probably the most negative risk, is that they go back to testing those lows. The proof probably, as you say, is going to lie somewhere in between, because I suspect that we are going to have that kind of liquidity support coming into play. The stability facility, I think, will be expanded, and that support will come through the International Monetary Fund. That will obviously help to put a floor under markets in that sense. But those who are expecting that we would end the year with significant upside for equity markets and risk assets generally, I think are now going to be well and truly disappointed.
That's the worry, Richard, because after the rally of the last couple of weeks, everybody was bracing themselves for a good November, December and a good year-end rally to mitigate some of the pain for the early part of the year. You think that's unlikely now, that you can get a 10-12% upside even from here?
I think that would be very difficult. I think it would take most of the planets coming into alignment, as we say. I was certainly one of the people hoping and wishing for a solid end to the year. I think most of us in the business are. But at the end of the day, I think the reality is that we are still beholden to European policymakers. We're increasingly beholden now to Greek politicians and the Greek public in relation to their acceptance or rejection of the austerity measures that go with the bailout package.
What do you sense from clients you speak to right now who are large emerging market investors? I mean, are they in a frame of mind where they're saying we need to take on more risk and put money to work by the end of the year, or are they choosing to sit on their hands and watch the European situation for a bit longer?
It's a very good question you ask, and as of yesterday I'd spoken to about 5 of our major Asian-based clients, and these are some of the big hedge funds. I have to tell you that a number of those funds are 50% weighted in cash at this point in time, with a do not invest moniker there at this point in time. So really they're resisting the urge to trade at all until they see a much clearer pattern, and I think until they see more of alignment, and this is what you were talking about earlier, between credit markets and equity capital markets.
Richard Gibbs, always a pleasure. Thanks very much for your views today and for taking time out. That's Macquarie saying hold your expectations on a year-end rally. Things are still fluid. There could be more volatility. Picture's not clear just yet.